All right, well, I think we'll get started. As always, this is recorded and it will be shared on our socials. So you'll be able to see the webinar in its entirety if you have to drop off early or if you come in late. But we'll get started and see if anyone else joins later. So today we are going to be talking about Yield AMMs. So to get it started, we'll look at Yield AMMs in a more generalized context. As most people think of Yield AMMs, they think of Pendle because that is the leader in the space. But there have been other ones that have existed in the past and ended up stopping the protocol, or some other ones that do exist now that haven't gained as much traction as Pendle. So we'll kind of go over the whole space, just the concepts of the Yield AMM, so everybody can understand that at a higher level. And then we'll look at some of the use cases, why Yield AMMs have become quite popular in the recent months, last half year, let's say. Look at Pendle's success, because again, I think it has just recently passed 5 billion TVL, $5 billion TVL. So it has become quite a big protocol in the DeFi space. We'll also as always, dive a bit into some of the risks. Since any protocol, there's always some risks. It's always good to know that those exist. And if you start interacting with these protocols, what could present itself as a risk for you as a user. And then we'll wrap it all up with a conclusion. So as always, quick update about Into the Block. First off, I think one of the most exciting things that we have recently launched is our risk radar for Athena. So USDE stablecoin and the ENA token. Athena has gained a lot of traction and has been a big topic in the social media space of crypto because of its controversial design, let's say. So whether or not you're bearish or bullish on the idea of Athena, the risk radar is definitely a spot to look at some of the different economic indicators related to Athena to help you position yourself in the way that you think would be best for your strategies, or perhaps to change your mind on whether you're bearish or bullish, flip that. So some very interesting indicators. For example, here we have the reserve ratio, where they have a reserve that if the funding rate of the token goes of ETH goes negative, how long it would take for their reserve to cover that negative funding rate would how long it would take for that to get drained based on the negative funding rate that exists. Some other updates, because this is still one of the hottest topics in the DeFi space. We've added some new indicators to the EigenLayer restaking perspectives dashboard, such as looking at the median balance of holders across some of the major LRT tokens and some other indicators as well. And then also we have updated our Bitcoin ETF perspectives dashboard to include, among other indicators, net flows of all the different ETFs that are out there to see who's buying, who's selling, or specifically, has Grayscale stopped selling? As we can see from these, still have some more selling to do, but when that flips, maybe that's a bullish indicator. So let's jump into what we're here for, which is Yield AMMs. Quick introduction to what are Yield AMMs. Really, it's a subgroup of the AMM category of protocols. So regular, more traditional AMMs you would think of are Uniswap, Curve, Balancer, maybe Maverick as well, some of these different dexes where you can exchange different tokens for other tokens. Yield AMMs would be considered a subgroup of this larger category, where what they allow users to do is to trade the yields of yield-bearing tokens. So think of any of the LSTs like STETH, RETH, or the LRTs like EtherFi and Renzo, as to name some of them. This AMM allows you to trade the yields that these tokens generate if you think that the yields will increase in the coming future or decrease in the future. So it allows you to speculate on what these yields would be over time. In yield AMMs, usually there's two core tokens that reside within the yield AMM that are the main components of how the dynamics of the AMM work. They might be named different things depending on the protocol that you look at, but the general name here is the yield token, or YT, and the principal token. So the yield token gives a holder of that token the rights to the earnings or yields of the underlying asset. So think of, again, like STETH. If you had the YT of an STETH, that means that you have the rights to the yields, the staking yields that STETH is generating for one STETH. So if you hold one YT, you hold the rights to the earnings or yields of one STETH. The principal token, on the other hand, gives the holder a right to the underlying assets minus the yields or earnings, because that is in the YT token, but at a discount price. So you can buy this principal token at a price below the value of the underlying asset, like STETH, and at the maturity of that token, it would be worth one. It would be 1-to-1 worth of the underlying asset, which I'll dive into a little bit more in just a second. Again, yeah, so to clarify on this, how the yield AMM dynamics work is that there is a liquidity pool that contains the PT token, which is the token that is essentially the underlying assets at a discount of at a current discount of compared to the underlying asset. And then there is the underlying asset. So keeping the example of STETH, the pool would contain PT of STETH. So this would be trading, let's say, like if the LP just opened up, let's say at 0.98 worth of an STETH, let's say. And then the other part of the LP is the underlying token, the STETH, and it's in a specific wrapper, at least in the context of Pendle, that allows this token to be split into more YT tokens and PT tokens based on demand for the YT and PT tokens. Some things to keep in mind is for how these tokens work is the YT token, since it is just giving you the rights to the yields of the underlying assets for the length of the maturity of the pool. At the end of the pool, at the maturity date of the pool, the YT token will be worth 0. So that is to be expected. However, in the meantime, while you're holding the YT token, you can claim all the yields that are generated from the underlying assets. The PT token, which you would have bought at the beginning of the pool's initiation at a discount, would be worth 1 of the underlying asset. So that's how these two tokens work and how they interact with each other. To explain a little bit more of how these tokens interact with each other, they interact, in a broad sense, through what is called the implied APY. So the implied APY is essentially a market consensus on what the annualized earnings, the annualized amount of earnings that a yield-bearing token would earn over a period of time. So let's say, for example, with PT ETH again, the current staking yield for ST ETH, excuse me, is 3%, but there is a belief by some people in the market that over the next 3 months, the yields, the staking rewards will be closer to 4% annualized. So people would buy this YT token to essentially capture that additional yields that they think the market is not taking into account. And that means that the PT token would be at a higher, a larger discount. So people who think that maybe this is the correct APY would be able to buy this at a discount comparatively. To better understand exactly how the implied APY changes, given if you're buying or selling assets, Pendle has a very nice cheat sheet that we've added here, this little image down below. Essentially, if you buy YT tokens, you believe that the APY will be higher than what it's valued at now, and so that increases the implied APY. But if you're buying the PT tokens, you assume that the value will be, the APY will be lower than what the implied APY is now. And so you're wanting to capture that difference in the form of a discount. And then it's just the opposite for if you were to sell those two tokens. Then continuing on the dynamics of the pools. So while this is still in the broad sense of Yield AMMs, we will focus a bit on Pendle since it really is the main player in the ecosystem of Yield AMMs, which is how the AMM curve works. Excuse me. And so basically, as we were showing in the previous slides, as demand changes for YT and PT, the proportion of PT in the pool changes. Now remember, the pool has part PT tokens and then part the underlying tokens. And so as demand for the YT or the PT tokens changes, it changes the proportion of PT in the pool, which will then change the price of PT relative to the underlying asset. So this example that you can see here is the blue dot is the initial proportion of the EETH pool on Pendle specifically. And the simulation here is showing that if you were to be selling PT ETH into the pool, how the price would change relative to the underlying asset. So essentially with 1 ETH or EETH, if someone were to be selling a bunch of the PT ETH into the pool and it changed the proportion to have higher proportion of PT in the pool, the amount of PT that you'd be able to buy with one of the underlying asset would slowly increase. Excuse me. Another thing that is, this is specific, this chart here is specific to Pendle, but can be generalized to some extent over all of the different Yield AMMs that exist, is that as the pool approaches its maturity date, the curve in the AMM begins to flatten, because once the maturity date has been reached, PT is worth one of the underlying assets. And so the curve becomes completely flat, as you see at the very end here. So this is something to always keep in mind, because it's a little bit different than Curve or Uniswap, in the sense that the actual curve that you're trading on is changing over time. So what the price movement would be if you traded at the very beginning of the pool, where it's going to be a lot steeper, as you can see at the very beginning, compared to closer to the end of the maturity date. The price movement of the tokens will vary with time. Coming to what everybody wants to know is the use cases. So I've alluded to it already, but yield speculation is definitely one of the most popular things that are happening right now with these yield AMMs, which we'll highlight a bit more a little later. Or fixed earnings. So essentially, if you want if you buy a PT token, you basically lock in your earnings if you hold that PT token until the maturity of the pool. So this is a great way to hedge maybe against more volatile pools in your portfolio. If you wanted to just lock in some rate, you buy that token, you'll already know how much you will have earned over that fixed period of time. Liquidity provisioning is always something in an AMM that is a use case where users can earn on the trading fees and the incentives that there are. And then trading, I've kind of alluded to it in this meme here, but trading in the sense of that the YT and PT tokens both have prices. So they're traded on the open market. And so you can trade you can speculate on what other people are speculating for this, in the sense that if people are thinking that the YT token for a certain asset will have a very high yield, and so they're buying a lot of this. If you believe that people will think that in like a week, let's say, you would buy those YT tokens ahead of time, and then you would see the price as the demand for the YT token increases, the price for the YT token increases, and then you would just sell, realizing the price change in the token. So it's a very advanced use case because these are very volatile markets, but it is something that a lot of people have been able to do profitably in Pendle, for example. Yeah, again, coming here for strategies that you would have, holding YT essentially allows you to hold, to earn the yields or whatever earnings that a yield-bearing asset would have at a fraction of the cost. So you can see here in this image, the YT token for EETH is $152. So if you were to purchase one with one ETH or EETH, you would be able to purchase multiples of YT tokens and basically hold the rights to multiple EETH without actually holding 10 or 11 EETH, which is a very high cost to hold that much. If you're more interested in just earning some fixed rates and know that you'll have a certain amount of earnings at the end of whatever the maturity date is, holding PT works. And then an LP allows you to get some of the yields from the YT tokens, some of the higher rates that you would be getting from PT, as well as swap fees and pool incentives in the form of, for example, Pendle tokens with relatively low impermanent loss risk. So now let's talk about Pendle. Pendle has seen a huge amount of growth. So these charts are a bit small, but basically what you can see here is that over the last year, we've seen, even just in the last 4 or 5 months, pretty substantial growth in the market cap of the Pendle token. And also the second chart, the chart on the bottom here, is the address birth death ratio that we have as an indicator into the block, which essentially compares how many new participants are entering the market relative to participants that maybe have had or hold Pendle but haven't been using it actively in the past. And you can see that there has been a pretty substantial growth since the beginning of this year, specifically on both of these charts. This has really been driven by the current points meta. So points, that's what everybody's talking about, trying to get those airdrops. The YT tokens for Pendle, if you hold a YT token, you hold the rights to the points that underlying asset earns, or yeah, the underlying asset earns. So all of these liquid restaking tokens, also SUSDE and USDE from Athena, all are offering points, and people have been buying like crazy these YT tokens to try and leverage up essentially on potential airdrops. But more specifically to Pendle, they have a VE tokenomics setup where VE Pendle holders are earning fee share of the protocol, and also can boost the incentives that they get if they LP into a position. So both of these have really helped Pendle maintain a user base, while some other protocols have dropped off and are not active anymore. This VE tokenomics has really worked in Pendle's favor. And then just in general, the growth in yield-bearing tokens in the whole space has really helped Pendle profit, because that's what they trade on. Just an example of how big of an impact the points setup is having on Pendle. We can see this chart here. This red line is when EtherFi did their airdrop. So this was when people who were holding points realized actual gains on this point meta. And you can see this is the chart showing the price of Pendle, the token, skyrockets afterwards. So really, people started to turn their heads and realize that it could be quite interesting to hold the token of the protocol that you're operating on. Again, the points and airdrop mania has been a huge driver for Pendle and will continue to be so. On the right here, you see some of the examples of the multipliers that you would be able to acquire by buying the YT tokens through Pendle for Athena and EtherFi. And then highlighting here just the impact, what people are trying to get a share of is the airdrops for Athena and EtherFi, where we can see that the initial value of the airdrop for Athena was almost $500 million. So that is a lot of airdrop liquidity coming into people who have been farming these points. And then for EtherFi, just their first airdrop was 250 million. And then there's going to be a equal size almost airdrop coming for people who are still engaging in their point system. So it has been very profitable and will continue to be so for Pendle. Of course, though, there are risks for any protocol in DeFi. One of the risks, which is a risk if you aren't aware of this happening, so I like to emphasize this point, is that the YT token will be worth 0 at the maturity of the pool. So what this essentially means is if you are buying a YT token and you plan to hold it till the maturity of the pool, a user of it doing this strategy is believing that the earnings of the yield-bearing asset, so either yields or any sort of future airdrops, will be higher than the capital that they have paid to hold the YT token. So if you coming back to the previous example where you were to pay 1 ETH to get maybe 10 YT tokens, so the right of the earnings of 10 ETH tokens, what you're hoping is that the points and the yield from staking will be higher than the cost, which is 1 ETH in this context. So as of right now, it has been the case that people that have done the point farming for EtherFi and Athena have received quite high payouts for the airdrops, but this isn't always the case. And now, as more people have understood the setup, everybody is jumping into the point farming with YT, and so we'll probably find some sort of parity where like the cost of the YT tokens is pretty accurate to what your airdrop would be. So there's always this risk that you could potentially do this and end up with an airdrop, a future airdrop, and yields that are worth less than what you had paid for. Then more nuanced is the potential capital loss on PT tokens if sold before maturity. So for example, since PT tokens are traded at on the open market at a specific price, even if you buy a PT token that says that it's at a 0.9 discount on the underlying asset of ETH, for example. If you sell your token before the maturity, there is a potential that based on the demand in the pool and for the different YT and PT tokens, that you could end up selling at a loss because perhaps you have bought at 0.9 ETH and in a month, the PT discount is actually 0.85. And if you sell at this point, you would be realizing a loss. So that guaranteed or that fixed earnings that they show is specifically for if you hold it all the way to the maturity of the pool. So that's an important thing to know. Another risk, which isn't necessarily capital loss risk, but a risk that is good to know is that on some of these different pools, if the demand is too high for the PT or YT tokens, or YT tokens specifically, the PT proportion in the pool can reach a point. This is specifically in Pendle. It might change for other Yield AMM protocols, but can reach a point where it trades out of range, kind of similar to like a Uni V3 pool, where you wouldn't be able to sell your entire portion or any of your PT back to the underlying asset, and you would be forced to hold the asset until maturity. So in this sense, you wouldn't necessarily be losing your capital, but make sure that if you are deploying into PT, that it is capital that you can set aside until the maturity of the pool. That's the best way to avoid this risk. And then, as always, there are technical risks for any DeFi protocol. Pendle has, or any of these Yield AMMs will have layered smart contract risks because they're probably built on top of several different layers. So for this example we see here, Pendle, if you're looking at the EETH pool in Pendle, that's built on top of the EETH token, which is made by EtherFi, and then EtherFi is completely integrated into EigenLayer. And so if there was any sort of smart contract risk or exploit that happens at the bottom two layers, this would bubble up to Pendle and could affect you on that level. And then as well, similar to the PT issue, if you hold an LP position and you exit before maturity, there is the potential of impermanent loss. It's much less of a risk than compared to like a uni pool, a uni V3 pool or a curve pool, but it still does exist. Also, you might have some like higher slippage if you needed to trade a certain amount of the PT tokens back into the underlying asset. So this is also something good to know. And there we are, we're at the end. Some of the main conclusions, Yield AMMs really have become quite popular, or Pendle specifically, because it tailors both to users that are risk on, trying to do some extra degen or aping into airdrops, for example, in the moment, and also risk averse users who are looking to have some sort of fixed returns on their assets. Pendle growth is likely to gonna continue with the continuing point narrative. I don't see any stop in this point narrative, so I imagine that Pendle will still continue to profit from this, and I wouldn't be surprised if we start to see other protocols launch trying to capture some of that market share. And YT and PT tokens still carry risks. So always DYOR when you're looking to ape into something, because it's important to know what sort of position you could end up in if the Black Swan event happens, or if demand changes based when you are when you enter the market. Next webinar is risk versus reward. So kind of piggybacking off of what I was just talking about. We're going to look at exploring institutional DeFi strategies. This is something that we work on a lot at Into the Block. So it should be a good one. Looking at a broad sense of different strategies and what sort of risks are present in those strategies and what sort of rewards you should expect from that. Thanks again. Any questions for anyone? I'll stick around for a couple minutes if anyone has any questions on Pendle in general, YT or PT tokens. It it can be quite confusing. I think there's a lot of people that are in these strategies that don't necessarily understand all of the dynamics. So it's always best to ask the questions to really know what you're getting yourself into. And we've added the sign up link for the next webinar. Well, Sebastian, glad you learned a lot. It's been something that we've been researching for quite a bit in the last several months to a year. It's a very interesting space, and I'm sure that it will only continue to grow as LRTs start to get their rewards from the AVSs in the form of either airdrops from the AVS tokens or just the fees that they'll be earning. So Pendle will probably become a very big hub for trading this. All right. Looks like I explained everything perfectly and there are no questions. So we'll sign off here. And remember to sign up for the next webinar on May 22nd. And we'll see you then.